I've used hundreds of thousands of 0% business credit to build my business and real estate portfolio. A little while ago, I got over $100,000 at 0% to cover rehab on 2 rental properties. And once the renovations were done, I refinanced, pulled the money back out, and paid off all the funding. Now those 2 homes bring in about $2,000 a month in passive income, and I'm not stuck with any high interest debt. No loans, no investors, and none of that damaged my personal credit. And here's the wildest part. I didn't have years in business, I didn't have perfect credit, and I didn't even have a ton of revenue. I just had the right setup and a strategy that most people don't even know exists. I'm going to show you the exact same blueprint that I personally use and the same system that helped over 100 business owners get approved for funding. Plus, I'll show you the exact order that I applied so you don't get stuck denied. The first step is leveraging your personal credit. Most people focus on net 30 vendors or trade lines, and that's a slow route. The fastest way to unlock real business funding is by leveraging your personal credit the right way. Here's what most people don't realize. Even though business credit cards report to your business credit profile, your approval is still based on your personal credit, especially for any type of funding that's worthwhile. If your personal credit is good, then you can unlock 0% business credit fast. If not, then that's the first thing that you need to fix. Here are the minimum personal requirements that I recommend to get approved. You want a 680 plus FICO credit score, no negative items, credit usage under 30%, ideally under 10%, 7 to 10 primary accounts, 3 plus personal credit cards with 5K limits, 1 card from a tier 1 bank with a 10K limit, think like Chase, Bank of America, Citi, or Wells Fargo, at least 1 account that's 2+ years old, $15,000 in total available credit, 3 or fewer inquiries per bureau in the last 6 months, and 3 or fewer new revolving accounts in the last 6 months. If you check all of those boxes, then you're ready to start applying for 0% business credit cards. If your credit isn't quite there, then don't worry. Most people just need 1 to 6 months of cleaning up for optimization. You can start by adding 2 to 3 authorized user trade lines that are at least 5 years old, and that should boost your age and lower utilization fast. And if you got derogatory marks or negative items holding you back, then you can start the credit repair process. I do have a software that can help you, which is called Credit Rehab Pro. It's a DIY program that I put together to help you clean up your credit the easiest way possible without paying crazy fees or getting scammed by shady credit repair companies. The link is down in the description if you need to fix your credit. Now, none of this funding would be possible without setting up my business the right way. And I'm not talking about just forming an LLC and calling it a day. I mean setting up your business so it's fundable. So when banks or lenders look at it, they see that it's a real company and not just a side hustle. This is where most people mess up. And I almost did too, because when you're just starting out, you don't realize that how you set up your business decides whether you get a $5,000 limit or a $50,000 limit. So here's what I did step by step. First is to set up an actual business address, not my home address. This is one of the little details that can limit the amount that you can get. I didn't use my home address. I almost did, but after doing a little bit of research, I realized that I could have been making a big mistake. Here's why using your home address can hurt you. Lenders and credit issuers actually track this stuff. And based on data points, businesses that use a residential address, like a house or an apartment, default on loans way more than businesses with a commercial address. So having your home listed as the business address can automatically put you in a high risk category, even if you're doing everything else right. And it gets worse if you use a PO box, as most lenders won't accept a PO box as a legitimate business address. It instantly signals a red flag. So here's what I did instead. I got a virtual business address. I didn't need a physical office or storefront, I just needed my business to look professional and credible. So I went with a virtual office through iPostal. You got plenty of options. You can use Opus, Regis, Alliance, and plenty others. These will give you a real commercial address that you can use on all of your legal documents, including your EIN application, bank account, credit applications, pretty much everything. And they receive the mail for you, so it's super convenient. Now, as a pro tip, you want to make sure that your address isn't labeled as a CMRA, which is also known as a commercial mail receiving agency. Lenders can see this through the USPS data, and those addresses can flag as higher risk. You can check yours using the free USPS address lookup tool, and if it shows CMRA, then switch it to a verified commercial address. Now, using your home address isn't a death sentence, but based on data points, commercial addresses will yield higher limits. Next, I got a separate phone number and a business email. And this might sound small, but trust me, it matters more than you think. When lenders review your business applications, they're not just looking at the numbers. They're looking at how real your business appears. Every detail either builds trust or raises red flags. So let's start off with the phone number. I didn't use my personal cell or home phone. That's another mistake that can quietly hurt you. Just like home addresses, these businesses default at a higher rate. So here's what I did instead. I used Call8 to set up an actual business line. If you want to level up, then you go for an 800 number. It makes your business look bigger and more legitimate instantly. As a pro tip, just make sure that your phone number is listed under your business's name and not your personal name. You can even get it listed on the 411, which adds another layer of credibility. After that, I set up a business email. I'm not talking about your name at gmail.com. That just looks way too amateur. I bought a domain and created a branded email like info@mycompany.com. It costs us maybe $10 a month, but it made my business look real and another layer of credibility. Now that I had the appearance and contact info of a real business, it is time to piece it all together and make it official. This is the foundation of everything. Without it, you're limiting the amount of credit that you'll get. But forming an LLC isn't just picking a cool name or filing out a form. There are a few things that you gotta get right from the jump. Before I picked my business's name, I ran a trademark search on the USPTO website. It's not fun, but it is important. If you chose a name that's already trademarked, you can get hit with a cease and desist or worse, a lawsuit. You don't want to be forced to rebrand your website, email, and bank account just because of a name conflict. Now, even if your name sounds cool, certain words can automatically get you denied for funding. Lenders look at some industries as high risk. So if your business name includes keywords like credit, capital, real estate, broker, insurance, or something similar to that, it can trigger an instant rejection, even if everything else is solid. I kept my business's name neutral and basic, something clean like Wynn Enterprises, and later I could always file a DBA if I wanted to operate under a different brand. Once I had my name locked in, I filed my LLC with the state. I did it the old school way, but if I had to do it again, I probably just would have gone with a service like Busy. You can file it for free and just pay your state fees. They also include a registered agent for the first year. Next is that I got my EIN from the IRS. So this is basically your business's social security number. You will need it to open up a business bank account, file taxes, apply for business credit, pretty much everything. And it's totally free. You can get this in about 5 minutes on the IRS's website. Now, as a pro tip, when you apply for an EIN, just make sure that the address on file matches your actual business address. If the IRS has your home address and your bank has your virtual address, lenders might get confused and it is a fast way to get flagged or denied. So once I had my LLC, EIN, address, phone, and email set up, the next move was open up a business bank account, and this step is massive. Here's why it matters so much. The day that you open up a business bank account is often considered the official start date of your business, especially at certain lenders. Even if you filed your LLC 6 months ago, but you just opened your bank account just last week, guess what? Most lenders will treat your business as it just started last week. So the sooner that you open it, the better, because it starts your banking history clock, and that can directly affect how much credit that you can qualify for later. And this part is obvious, but it is worth noting that you need to separate your personal and business finances, period. Mixing them isn't just messy, it's red flag. Lenders want to see clean and organized finances, not Venmo screenshots and mixed up bank statements. Having a dedicated business checking account shows that you're serious. It gives you clean books, clear expense tracking, and way more credibility when it's time to apply for funding. So as a pro tip, pick a bank that you want to build a relationship with. This is a relationship game. The bank that you choose can impact what kind of credit products that you get offered, how high your limits go, and how flexible they are with approvals. A lot of financial institutions, especially credit unions, love working with customers that they already have a relationship with. So ideally, you want to open up your business bank account with a bank that you plan to grow with. If they already see your deposits, your balances, your activity, they are way more likely to extend you credit later. Now, in terms of where to open an account, you got plenty of options. You can go with a big national bank, a credit union, or even one of the newer fintech platforms like Bluevine or Novo. Each one has its own pros and cons. Some are great for rewards, others are better for easy approvals or relationship building. So check the link down below for a list of the best business checking accounts right now. For me, I want to choose a bank where I could build trust. I wanted to walk in one day and say like, hey, I've been banking with you guys for a while. What can you do about a line of credit? This isn't just about having a place to hold your money, it's about building long-term leverage. So start off with one, then when you decide with business cards that you want to go for, target those lenders much later. Once I had a business bank account set up, I officially had everything in place. My legal entity, EIN, business address, phone, email, and now a real banking relationship. Next is that I applied for my DUNS number. This is like a credit profile ID for your business. Dun & Bradstreet is the company that issues it. You can get one for free from the website. It just takes a few minutes. You will need this if you want to build business credit. And again, you just want to make sure that your name and address matches exactly what you use when you're forming an LLC and opening your bank account. Lenders don't always tell you exactly why you got denied, but 9 out of 10 times is because something simply didn't match. So it's super important during this step just to make sure that your business is set up and everything lines up. Now, this last part is something that most people don't even think about, but it can quietly make or break your ability to get funded. I'm talking about your industry code, officially known as your NAICS code. It stands for North American Industry Classification System. It's basically just a 6-digit number that tells the lender what type of business that you run. Every legit business has one, whether you're in real estate, e-commerce, consulting, trucking, or anything else. Lenders use your NAICS code to assess how risky your business is. Some industries are seen as high risk, like credit repair, cannabis, car dealers, or travel agencies. Others, like consulting or B2B services, are viewed as much lower risk. You can find the full list down in the description. Now, when you're first starting out, your NAICS code might not seem like a big deal. In fact, you probably won't even get asked about it until you start applying. But that's why it's smart to think about it now and not later. You don't want to misrepresent your business, of course, but many businesses qualify for multiple categories. Now, once my personal credit was dialed in and my business was set up correctly, I moved on to the funding phase. And this is where all the preparation goes into motion. Within just a few weeks, I got approved for over $100,000 in business credit cards with 0% interest offers that gave me up to 18 months to use that money. This funding helped me grow my real estate portfolio, but you can use this strategy for any type of business, whether you're flipping properties, scaling an e-com brand, or launching a new startup. The first thing to understand is that business credit cards are different from personal cards, but in a good way. Most of them don't report to your personal credit, so utilization stays low. They often come with higher limits, and when you know how to apply, you can stack multiple approvals quickly. For me, I specifically went after banks that had a strong 0% APR promotions. These are cards that let you borrow money with no interest for 6 to 18 months. This will give you time to use the funds, grow your business, and pay it off without getting hit with interest. Some of the cards I personally like to target include the Chase Ink cards, American Express Blue Business cards, US Bank, and Citizens Bank. These are solid lenders with strong approval history and good intro offers if your personal credit is where it needs to be. Next is that I applied in a strategic way, also known as a funding sequence. A funding sequence is just a planned run of applications, where you apply for multiple business cards within a short window, usually every 6 months. This goal is to spread out your applications across banks that pull from different credit bureaus so you don't stack too many inquiries on one report. So here's how I did it. I live in California, and based on my region, I knew that Chase and American Express are going to be pulling from Experian. So I started with those, and then I moved to US Bank, which pulled from TransUnion, and finally Citizens Bank, which pulled from Equifax. Now, keep in mind, what bureau gets pulled depends on where you live. Someone in Florida or New York might see different results than like I did in California. As a rule of thumb, you don't want more than 2 hard inquiries per bureau during a funding sequence. So this will give you the best odds of approval and the highest possible limits. If you are targeting specific bureaus, just make sure that you freeze the other 2 so you won't get blindsided. So here's an example of a funding sequence that you can use. For Experian, aim for Chase and American Express. For TransUnion, you can use US Bank or Elon Financial Lenders. Or for Equifax, you can aim for KeyBank and Truist. So once I got approved, I used my business credit cards to fund my real estate investments. The most common way is by using them to pay for renovations. Now, most contractors and vendors don't accept credit cards, but you can get around that by using services like Plastique or Melio. These platforms let you pay vendors via wire or ACH, even if you're paying with a credit card. So your vendor gets the cash, and your card gets charged like a regular purchase. These services usually charge around 2.9%, but when you're using 0% credit, that's still way cheaper than taking out a loan. Now, if you're in a business like e-commerce or coaching, where most of your expenses can go directly on a credit card, this becomes a no-brainer. If you need someone who needs cash in hand from your credit cards, not just vendor payments, there are liquidation services for that. They help you turn your business credit into working capital by liquidating your cards at a fee. It is usually around 6%, so if you have $100,000 in available credit, you can liquidate up to 90% of that and walk away with $90,000 cash minus the fee. That's still better than most unsecured loans, which can carry 10 to 20% interest or more. So even if there is a fee, the flexibility gives you an easy path to capital. You don't have to be in the business for 2+ years or show documents, so you have to weigh the pros and cons. So everything that I covered in this video, you can definitely do yourself. This process works and it is repeatable. Look, I've been doing this for years and my team has helped over 100 business owners secure more than $17 million in funding using this exact process. So I created a free credit bootcamp, a complete 3-part training where I walk you through how to build the perfect personal credit profile, how to set up your business the right way so the banks say yes, and how to apply in the right sequence to get anywhere between $100,000 to $300,000 in 0% business funding. It's completely free, so take the training, implement the steps, and get funded. Click the link down below or scan this QR code, and I'll see you inside.